You are listening to chartingwealth.com for Friday the 8th of September 2017. I am traveling and I have a poor internet connection and it's going to take a while to upload this podcast. So I'm going to keep it as short as I can so I can upload it and get it out to everyone as quickly as I can. I do want to encourage you to subscribe to chartingwealth.com, our daily market reviews at the website. It is absolutely free. With it, you get all the benefits that we have to offer. The layout that we use that's on the screen for those looking at the video right now, along with our How to Read a Stock Chart video, along with the worksheets, the daily, the weekly, and the trade worksheet. And we have a series of podcasts we're going to be putting out for you on mindset. Those of you who are active investors, active traders, or active students, you know how important it is to have the proper mindset. And we've got a series of 4 we're starting with. I'm going to record the first one tonight if the internet's going to work with me to be able to do that. We will be getting that out members only to begin with. So if you want to be a member, to receive those special podcasts along with in your mailbox every day, this version of the market review, go to chartingwealth.com, sign up. Let's jump into the market today. We see that the S&P 500 is flat for the day. 0.00% increase, decrease, neither one, flat. What we see as far as the weekly chart goes, we see the derivative oscillators losing downward momentum just barely, and we see that the price percent oscillator is pretty much flat still, negative, hasn't crossed over, going up. When we look at the 2-day chart on the S&P 500, we can see how the market is sliding sideways at this point, trying to figure out what to do. It technically has crossed over. It won't take much at all to move the PPO, the price percent oscillator, down. Derivative oscillators gained some energy. And again, waiting to see how this shakes out when we can get back into a down movement if that occurs. 4-hour hasn't crossed over going down yet, did move a little more down during the day, up in the morning, down in the afternoon. It just flattened it out. We see the market sliding sideways. Now, all things being equal, which way do the charts move? They move in the direction of the biggest chart, which is the weekly chart, which, according to our derivative oscillator and our price percent oscillator, particularly the price percent oscillator, very similar to the MACD. Want a great training on the price percent oscillator? Please go to the website chartingwealth.com, look under trainings. Got a great one there for you as to why it's the king of indicators and why we use it the most, because it tends to be the most accurate with a trending market, not with a sideways sliding market. It's what we're having happen right now. That's why we don't have any calls on getting into anything. But that's what we see with the S&P 500. Now let's go from there to the Qs. That's the Nasdaq 100. It was up for the day. Not technically, it was up for the day, 0.23%. We see again the derivative oscillator weakening significantly. We see the price percent oscillator sliding sideways. Second week of up movement with 3 prior weeks of down movement. What do we see going on the 2-day chart? Of course, it crossed over back on the 2-day chart ending Friday the 1st of September. But again, please note that the movement since the 1st of September has all been well within the green up candle from the 1st. So again, not any significant up movement to speak of. It's not bounded above. In fact, the Bollinger Bands, the volatility bands, have decreased. They're pinching in tighter. When you've got a trending up market, they tend to spread out. Well, they do spread out. What you have happening here is a tightening because of the sideways slide. Now, if we look at the 4-hour chart, what does it tell us? It, of course, shows us, excuse me, it shows us that indeed we have the market moving sideways and again tending up, hasn't crossed over going down yet, but the derivative oscillator already has and is growing. So continue to pay attention to these markets. Let's see what we see. If we do indeed see a pullback occur, and if it's a strong enough drop in the market, it could pull over the 2-day chart along with the 4-hour. But right now, we've got that schizophrenic effect where the 2-day chart's in a confirmed up move, and that's substantial enough that, again, we would have to have a significant drop to pull that over. But if you do see the 2-day and the 4-hour crossover going down at the same time, since the weekly's already in a down move, you might find an entry point. Okay, let's keep moving along back to the weekly. I'm glad the internet's working with me. We continue to see the bonds moved up strongly for the day, 1.02%. We have our 5th week of strong up movement in bonds, and the derivative oscillator is moving up, and of course the price percent oscillator has kinked up like a hockey stick even higher. That is a good sign on the weekly. On the 2-day, again, still positive. We had that 2-day vertical crossover all the way back on August the 9th. We've only had a couple of times of pullback, and again, we are still continuing to see movement above the 2-day trend line, well above the weekly. Things are looking sweet. The derivative oscillator had lost a little bit of energy on the 2-day candle ending on the 6th. That has been corrected on the first day of the latest 2-day candle on the 7th. So we'll continue to watch that. What do we see going on the 4-hour chart? Of course, it's continuing to build. If some of you jumped in after that crossover on Tuesday the 5th, of course, the jumping in point would have been in the morning on Wednesday, somewhere around, it opened around 128, somewhere at about 128.50, something like that. If you jumped in, of course, it's hit as high as the high was to 129.29. So again, hopefully you were still running that up move and weren't just jumping in, but perhaps jumped in somewhere around the 125, 126 point. Again, looking pretty, still have that movement well above the 2-day trend line, and of course very well above the weekly. Now, let's go back to our weekly chart. Last chart we'll look at for the day, the one that's up the most. Gold continues to look beautiful, up 1.04%. Gold crossed over, going up on the weekly chart. Weekly vertical crossover all the way back on the 11th of August and has continued to trend up. Actually started moving up all the way back about mid-July and has continued to bound up this latest weekly candle. Huge, strong up movement. And of course, what do we see on the 2-day chart? We, of course, it crossed over all the way back on the 24th of July. And of course, after we had the weekly vertical crossover, the 2-day just continued to bound up. Things have been looking beautiful, and remember those entry points on those weekly vertical crossovers typically around 10:30 a.m. on a Monday morning or whenever the 4-hour chart allows you to do that. What do we see going on? Well, of course, since the 4-hour chart weekly, the 4-hour chart crossed over going up back on the 28th at noon. We had an entry point somewhere around about the opening at 123, and of course gold is as high as 128. So things are looking sweet on our 4-hour chart. After it drug sideways there for a while and was getting us worried, it then bounded down a little bit, but then when that crossover went in the same direction of the 2-day and the weekly, has it not been beautiful, my friends, that it has skied higher and higher and higher? Those of you who followed the rules jumped in around 123, 124 have been awarded with a good $4 or so in your virtual trade per share since just, around the 29th or so of August. So it's been beautiful. Folks, that's where we are as we end the day. Please make sure that you have signed up for our daily market review so that you can receive all of the free training that we offer. It comes, of course, first to those people who have signed up and are members. We wish you guys all the best, as always, from the entire team here at chartingwealth.com. Take care.